So Matthew Warren's here with the business today. The US markets, they were still open, weren't they, when the news of those bombings came in from Boston?
That's right. They had about an hour to go when that news came in. And markets had already been having a pretty bad day. That news just added to the negative sentiment. We can take a look at what happened on the US market, certainly by the close. Now, the Dow Jones was down, and in fact, you can see that's what's been happening to the Dow Jones over the course of this year, way up, and down. And these were falls, the worst falls for about 5 months, in fact, across most of the markets, about 2% overall, as you can see. Now, what was mainly driving all of that was this slightly disappointing news out of China that although growth there was 7.7%, which is growth figures to dream of for most countries, that was slower than the 8% that had been expected. Now, this is what's going on in the Asian markets. Most of those falling as well. As you can see, the Nikkei has been recovering a little bit. Only the Kospi managing to stay flat for the time being.
Something else falling for different reasons, perhaps, though. This is the gold price, isn't it?
Yes. Now, we've been used as well to seeing the gold price just rise and rise. It seemed like something that was just a permanent feature of the landscape in the last 10 years. In fact, it's risen sevenfold. But we've now seen that dropping. In fact, it was down its sharpest fall for 30 years. Well, what's going on with the price of gold? Siobhan Silk has more.
It's the biggest two-day decline in 30 years. Gold prices fell 5% on Friday and a further 9% on Monday, plunging below $1,500 an ounce. The gold market hadn't seen such a steep decline since 1983. Along with silver and other precious metals, it's traditionally seen as a safe bet for investors. The plunge began last week as the Cypriot government announced it would sell some €400 million worth of its gold reserves to meet its financing needs. It continued to fall as China announced weaker than expected economic growth and was further weighed down by the expectation that the US Federal Reserve will tighten monetary policy, injecting less cash into the markets. Because the value of gold tends to remain fairly stable, it's used as a hedge against inflation. But as fears of inflation lessen in the US, fewer investors are rushing to put their money in gold. Prices of other commodities, including silver, copper and oil, also tumbled on Monday, leaving investors wondering how low they can go.
Come back here to Europe. Some welcome news for Greece.
Yes, now it's been a while since we've had some welcome news for Greece. The country struggling with this €270 billion loan because there have been some tough strings attached to that. One is that Greece gets regular visits from what's known as the Troika. That's the IMF, the European Union and the European Central Bank. They are the ones who've been providing all the money. Well, in their latest report, they say that the country's actually doing pretty well and they're on track to meet their economic targets. Now, what that means is that the next funding will be released, but this is what they're trying to get Greece to do. They say that at the moment, the debt to GDP ratio is 160%. So, in fact, they've got 1.6 times what they actually earn they've got in debt. Now, what they want to see is that that comes down to 120% by 2020.
Country, though, still going through pretty painful cuts, isn't it?
That's right. It's going to take a lot to get them down to that 120%. There have already been lots of spending cuts, tax rises as well. A further 15,000 civil service jobs will go by the end of next year. That's on top of lots of cuts that have already been made. Well, there in the middle of that picture, you can see the Finance Minister, Yannis Storneras. Now, let's take a listen to him. He says that much has been done, but challenges remain.
Up until now, 2/3 of the required fiscal adjustment has been implemented for the periods 2010 to 2016, as well as the 3/4 of the required competitiveness adjustment. The remaining adjustment is difficult, but not unachievable. There is, in other words, light at the end of the tunnel. Patience and consistency are required. The prophets of catastrophe have been proven wrong. Greece remains in the Eurozone.
Greek finance minister speaking there. Well, let's get some of the day's company news. And two offers to take over a troubled oil refinery in northern France will go before judges this Tuesday. The Petroplus site could close with the loss of 470 jobs unless a buyer is found. Well, the Panamanian Net Oil and Libya's Murzik Oil are the two remaining contenders, but unions say they're staging a protest outside the court in Rouen. They want two other bids to be included.
The French food group Danone says profits were up in the first 3 months of the year. Emerging markets helped boost sales by 4.3%. Europe remains a problem, though. The group saying the outlook there continues to be negative.
And the French luxury group LVMH said sales rose 6% in the first 3 months of the year, but sales of fashion and leather were lower at a 3% rise. That was below what had been expected, but overall, the group recorded just under 7 billion euros of revenues.
Now he's back here in France, another wealthy businessman looking set to return.
Yes, now we just were talking there about LVMH, and it was last week that we heard that the head of that company, Bernard Arnault, said he will not be taking Belgian citizenship. He said that was never anything to do with the tax rate, that in particular that 75% tax rate here in France. Anyway, he'll be back. And now this man, Alain Afflelou, who runs a big chain of opticians here in France, says he'll be moving back. Now, he currently lives in London. He says he's developing his Northern European interests there, but he's not in a rush, it seems. He says he'll move back within the next 3 years. So he's got a bit of time. And
I was going to say, he can probably afford to live in both, I suspect.
I'm sure he could.
Perhaps he will. Now, Microsoft joining the race to create a smart watch. I'm not quite sure why you'd need a smart watch, but anyway, they're joining the race.
You say that now, Stuart. Just wait a year from now, perhaps
I'll
a little
be
bit different.
For one.
Companies including Apple, for example, looking to get smartphones now onto your wrist as a kind of smart watch. And, well, some executives or potential supply companies say that Microsoft is also interested in it. Now, the company hasn't confirmed this at all, but the Wall Street Journal's been reporting that Microsoft has been looking at been looking at different supplies and designs and that kind of thing as well. So we'll keep an eye on all of that.
Would it do the ironing, though?
I think that's still to come, that kind of development.
It's the crucial question, is that's what we really need smart things to do.
There we do.
The ironing. Matthew, thanks a lot. Matthew with the business here on France 24. The latest news, of course, coming out of Boston. We'll be with you after the break. Kat will have that. Stay with us.